What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector, who also has a special guest on today, Pastora. How are you doing?
Yeah, this is my daughter Pastora, everyone. She's my pride and joy and pretty good at math. She's going to be part of the team at some point down the road and is an aspiring singer. So she's home for summer break and just wanted to say hi.
That's great. Well, it's a pleasure to have you back on the channel. Last time we
Thank
spoke,
you.
we were chatting about Silicon Valley Bank. Can you expand on what has developed in the market since? What are you telling clients right now?
Yeah, sure. So we talked in your program about that failure as well as Signature and Silvergate. There was a lot happening that week when we interviewed. And then to follow that up, Credit Suisse failed, which was interesting because they got taken out by their number one competitor, UBS, in Switzerland. And then First Republic got taken out by JP Morgan in April. First Republic, I think, was the 14th largest bank at the time of that transaction. So, you know, I'm of the belief that you're still going to see more pain in financials. You've seen the action in PacWest recently, PACW. Deutsche Bank dropped from I think 11 to under 9 in March, real quick. There's a lot of things out there that look wobbly to me in financials, and we've been shorting them. We went on another show competes with yours, David Lynn's program last month, and we mentioned Santander at 390. We mentioned Wells Fargo over 44. Both of those have worked nicely. There's just a lot of questions in the sector right now that remain unanswered. And don't take my word for it. I mean, look where big money is putting money. Look what big money is saying, right, Aaron? I mean, if you look at Jamie Dimon, who runs the largest institution out there at JP Morgan, he just put in his letter to shareholders since we last met that, essentially in so many words, there's going to be more pain in the sector. So when you see that from a $3.3 trillion company, I would take notice of it and respect those comments, right?
Definitely. So last time you were on, gold was in the 1900s. We were looking to take out 2000. Since then, we actually did take out 2000 and ran to within $5 of its all-time high. But recently, it's been pulling back. Another red day in the market today. So what's your current outlook on gold? And what are you looking out for?
Yeah, we have been constructive on gold on your program and others, and I have to say that coming within $5 of the all-time high was a surprise to me, and it didn't surprise me that it pulled back, right? Because that's resistance, and we bumped up against it and pulled back. Unfortunately, we're around 1941, I believe, right now. Here's the positive, though. So when you look at the last time we interviewed in March, I was talking about 1790 and 1800 holding, right? And I think we got between 1800 and 1810, somewhere in there. And again, bounced off of support, right? Like that's very bullish. And we bounced all the way to 2050 plus, right? So like now at 1941, this is a healthy pullback. I know it sucks. I mean, no one wants to see it pull back, right? We both stand to gain a lot of money to talk it up, right? Like so many others do. But you have to be pragmatic about it and look at it and say, okay, so from 2050 plus to 1941, could it go back to 1790? I don't think so this time. I think it's probably going to find some basing between that large gap of 18 to 1900, and it's going to bounce again. So this is sort of like your last really, really good pullback, I'd say, between now and November, because in November, tax law season happens, Aaron, and equities tend to get sold off. So no one can look out in this kind of a market 6 months really and say, oh, yes, this is definitely going to happen. So I'm looking at it as like a buying opportunity here. Now that we've seen how the market has reacted to the financial crisis that began March 8th, right? If you look at the week of March 13th, GLD and SLV both got large bumps in volume. That's new money coming into our sector, right? In my opinion. So that's very bullish. And at the same time, this is a pullback. So you have to be in one of two camps. The camp number one is that things are going to keep running, higher, like so many people think. You look at Nvidia's numbers overnight. You look at, Apple's numbers a few weeks ago. Look, technology is doing great. It had its best first quarter in over a decade, right? But that doesn't mean this continues infinitum. I'm in the second camp, which believes that, this stuff is going to pull back at some point, and the S&P hasn't made new highs, right? If you look at the highest level it reached in the fall of last year, really late summer of August of 2022, it was at 4305. And so, it hasn't even gotten back there one day since then. So I want to see the S&P break out above 4,300 with a lot of strength. And I don't think I'm in that camp unless we get the debt ceiling situation resolved next week. That's going to be huge. And B, the Fed plays ball on June 14th, which I'm not 100% sure that's going to happen, because since we last talked, I mean, the Fed watch tool has gone from a 9% probability of a Fed hike to a 45% probability of a Fed hike now, again, of another 25 basis points June 14th. So we'll see how this plays out. But, as the Fed is data dependent, I think as investors, we have to be data dependent and look at, what's going to happen with core CPE tomorrow. Look at PCE, excuse me. Look at next week at what happens with the debt ceiling. Of course, that should be first and foremost. And then on June 2nd, just after that deadline, you've got non-farm payrolls, which, as you know, people really, are looking at to determine how quickly job growth is happening in the U.S.
Exciting times we're in. So what companies are you looking at? What gold companies are you looking at within the sector then?
Sure. I mentioned on your program before, Cartier Resources, which is ECRFF. I met with Philippe again, and we talked on your show at 7.5 cents US that we thought the stock was undervalued. It rallied to above 12 after they launched their report. Again, before the report, they had 2.35 million ounces of gold in the ground in the right categories. So, with 15.5% of the company owned by Agnico, we just think now that you've got that report out, right? Like, you've got a PEA that's already out on the project, that gets a lot of majors more interested, right? Like, as a junior, you've got to get to that level to really start, getting some interest, unless you just hit some ridiculous holes or something, right? And so now that that's behind the company, I believe in Philippe's work ethic. I mean, the guy's probably out there shopping, the story to a lot of people and saying, "Look at our results," right? And I would be doing the same thing. So I think here at 10 cents US, it's up about 25% from where we mentioned it in March on your show. There's still a lot of value there. Also, I'm gravitating towards companies in the junior space that have large, amounts of ounces in the ground, just like Cartier. So Treasury Metals is a new name for us. That's TSRMF. If you look at their Goliath gold complex in Ontario, it's pretty impressive. They've got, 3 million ounces of gold right there, right? So you get between that 2 to 3 million ounce level, and people start on the major side or the mid-tier side even start getting more interested in what you're doing. So I think they've checked all the boxes. If you look at their report that came out, in Q1, they're looking at an AISC of around $1,000, very doable with gold over 1900. And they're looking at, very good IRR, even at 1750 gold. So, I think, that stock at 20.5 cents US is really close to its 3-year low of 18 cents. And we just started to nibble on it this week, literally. Another would be First Mining Gold, which, we've tracked for a long time, but I just saw an interview with Keith Neumeyer, who was the founder of First Mining Gold. That's FFMGF. And Keith just bought another 250,000 shares in the open market here at this price. So at 13 cents US, I mean, it's like, you're buying it cheaper than Keith just bought it, right? And Keith's a smart guy. So, they've got, again, two large properties in Canada, and Springpole and Duparquet look really interesting to me. When you look at the alternatives, right? When you look at throwing money at a junior that may or may not do well, right? That's sort of like gambling, right? There's a gambling element to investing in some respects. The names I just gave you have already done the work, right? Like, they've already done and spent millions and millions of dollars to get to where they're at right now. That's getting me more interested in companies like that have already put in the time and effort, and they're not so far, away from like a decision or production or getting taken over, or a 19.9% investment or a 9.9% investment, right? So that's kind of where I'm at on gold. I think those three are quite interesting. Pivoting to silver, if you want to, do you want to talk about silver?
Yeah, I'd love to talk about silver. That's exactly what I was going to ask you about. So silver compared to gold, and which companies are you looking at within the sector?
Yeah. So silver's, gosh, I had to look it up, but it's probably around 2270 the last I looked, an ounce. You know, we've been very vocal that at 2650 to 28, we're going to hit resistance. And unfortunately, that just happened again, right? I mean, I wish it were different, believe me. Silver is a top five holding for us, but we're trying to call it like we see it for investors so they don't get derailed, right? This sector will derail the best investor, really. It gets you really down on certain days, and you have to be able to look at the longer term picture and say, you know, is this something I can wait 1, 2, 3 years for? If the answer is no, you should probably do something else, right? Because you have to see the long game here. And the long game has changed substantially since March, right? For gold and silver. We're starting to see real inflows in some, gold and silver stocks, like big names. I watch the computer 12 hours a day, so I can tell you, like, I'm seeing bids that did not exist pre-March 8th, and that's really positive. It doesn't look that positive when you look at the actual price of some of your stocks. I get it. But you have to look at, you have to look at this as a process. It's not just, buy something and it goes up next week. It's sometimes you have to hold for months or years. And if you look at something like one of our largest silver companies, Silvercorp, we've held that since 2016 at under $1.50. We're up substantially on that position. So, it's a matter of, the silver is just the most frustrating, metal I think out there. I think many people would agree with that. And at this price point, I think it's looking pretty attractive because the gold to silver ratio as we speak right now is 85.5. So when you get to 90 plus, silver has almost always been a buy since the 1980s. So go, have your listeners go back and take a look at the gold silver ratio and look at that 90 plus number and then look at what silver does after that. And it's almost always a gainer. So we're positioning in some silver names right now as a result of that.
Yes, exciting times ahead. Hopefully we can see some gains for silver. We normally see silver, a little bit more volatile than gold, I find. So do you have any names that you haven't mentioned, or names that you would like to revisit?
Yeah. Well, in the silver space, I've mentioned Aftermath on your program before. In full disclosure, I work with them and I think very highly of Michael Williams as a person and as a CEO or director. So one of my things that I've said on your show and others is I will continually put money with people, whether it's this company or his other company Vendetta or another one we may mention later. I try to align myself with people more than just the projects, because I know I can get answers in good times and bad times, right? That's very important to me and my followers. Aftermath to me looks super cheap here at 16 cents US, and I think we mentioned it at 19 cents in March. It did spike and it has pulled back substantially. But part of that pullback, Aaron, is that they did a financing, right? So like when you do a financing, you're going to get unnatural pressure on your stock for a period of time. And I think that, look, it's just part of the mining business. You have to raise money at times that sometimes you don't want to raise, right? But everything remains intact there in terms of the story. When you look at other names, I mean, SilverX, which is AGXPF, has just been getting hammered here for a number of weeks. They announced something, if you look, to make an offer to buy what basically was Orkana, if you remember that name in Colorado, and they just put out a PR May 19th after market that was not going to go through at the moment, but they were hopeful that they could get to a deal in the future. And the stock has been punished for that. And I talked to management today, and I we're all kind of like puzzled. Like it's not like they're walking away and saying we hated this. They're walking away because the terms aren't as good as they had hoped, right? So I think they're doing the right thing for shareholders, and they're getting punished for it. So we think highly of management there. We think they, as a silver producer in Peru, they're doing something interesting, right? They're trying to get into a new jurisdiction that has a little less risk to diversify their portfolio. So whether or not that's going to work, who knows, right? But at least the company is thinking in that direction, which I think is also a positive, in addition to the fact that they're just killing it in Peru in terms of production growth. And then lastly, Guanajuato silver, I mentioned on your program last time at 28 cents. It ran to, gosh, I think 42 or 43 cents US, had a really beautiful run. Um, that really participated when silver bumped after March 8th. So, as an investor, I make a list of names that have high torque to silver, and this would be one of them. Ramon, their lead geo, used to work for Keith Neumeyer at First Majestic. They've got a lot of silver in the ground at their two complexes, and I like the management, in place in James Anderson right now and what they're doing at the company. So to revisit a couple of other names, because I like to always go back to not just good stories like that, but also stories that haven't worked yet. Golden Minerals, our top holding, AUMN, has not worked, right? We gave it to people at 24 this year. It's at 17. I mean, it's disappointing. But, what do you do when something goes down significantly? You pick up the phone and you call management and say, has anything changed with my thesis, right? I did that last week with the company. They're kind of perplexed that they've had this much selling here, and they, are avoiding doing a traditional financing. I think there's a lot of people out there that still think this company's going to do a financing, and it's because they don't pick up the phone that they understand that they're trying to work around that, right? So I would say that there's probably a 70 to 80% probability they don't do a financing here, which is very bullish. And they will have major news on Velardania as early as next month. So when you look at Rodeo and how small it is in terms of production right now, and you look at Velardania, it's way bigger. And I've known Warren for 7 years. Again, going back to that theme, like Michael Williams, it's like knowing the people you work with matters, right? I can pick up the phone on a weekend and get a hold of Warren. He's very responsive. And yeah, I think highly of the company. We're not selling anything at this price point. A couple others that I wanted to revisit. Forum. You and I met with Forum in January and at VRIG, remember? And the stock was around 7.5 US, and now it's at 6 US, and that didn't work yet either. But what's really interesting, if you look at the news flow this week, Aaron, they came out with a PR, I think yesterday, that a $3 million investment came in, flow through. And I mean, geez, I mean, that basically changes the game for them in terms of not having to do another raise. They just did a financing that they closed Friday, right, the 19th. And now they find another 3 million after a financing. That's pretty good. So in talking to Rick Mazer, the CEO, they're like, we're cashed up now for the entire summer program. So why not buy a 6-cent uranium stock if you're bullish uranium, right? That is our largest uranium holding at the moment. And then lastly, I mentioned this last year, but I wanted to go back to it because I think it's important. Again, mentioned it 4 cents on your program. It's at 2.5 now, and that company is called Canadian Critical. They had a name change. They were called Braveheart last year. The ticker is RIINF and CCMI in Canada. If you look at the news flow, May 1st, they rent an ore sorter, right? Why do companies rent heavy equipment? They plan to do something with it. They haven't done anything with it yet, right? But like the point is, it costs them money to do that. It costs them time to source that. Like you have to think, why would this be important to me as an investor? Well, pick up the phone and talk to Ian. I mean, he's very approachable. Ian used to run Thompson Creek, which got bought by Centerra, a major. So this guy has a lot of experience in mining, just like the other gentleman we've talked about earlier. And that's one of the things I also look for, Aaron, is expertise in the space, not someone who's done this for a year or two, but a CEO that has 10 years plus experience and has seen market cycles and understands how to navigate. And I think Ian fits that bill perfectly. If you look since the May 1st news, they had a strategic investor come into the stock, a hedge fund, basically, again, good track record in the space. Why are they putting money to work in a stock that the market's thrown out the window? Like, I think there's value there. And so, again, we don't give up on names if we think we're right? We just buy more on dips. One of my biggest success stories last year on your program, I mentioned it at 3 cents, was Idaho Champion, right? At 3 cents, we bought 1 million shares, right? We did it over probably 10 purchases, so we didn't move the market, right? And that was November, December. And fast forward today, it's at 10 cents. I mean, is that every gold stock? Heck no. It's probably the opposite. It's like that worked though, right? And it worked because our cost was 7 cents. We dollar cost average down at the 3 and 3.5 cent level, lowered our cost by half. And now if we wanted to sell, we could sell at a profit, right? So like, the idea is, pick up the phone, talk to management, see if there's something there that you can, get behind and feel more comfortable with what you own at least. And if you have additional capital, add to it.
Well, thanks for those updates on those companies, John. It's always nice to get your opinion. And do you have any final thoughts before we go here?
Yeah, sure. So I always like to give your listeners at least one new name, and I'll do that today. I mentioned, Michael Williams here on the show, and I have, bought Aftermath because of him, and Ralph, and Vendetta because of Michael and his team in Australia. They've got a really interesting project down in Mexico. Vortex Metals does. That ticker in the US is VMSSF. And one of the things that attracted me outside of the obvious is the fully diluted share count is 66 million shares. What people need to understand, though, is that 46% of that is owned by directors and insiders. Like, it is tightly held, right? So the stock, if we were to mention it a month ago, did not trade very well. Like, it was trading like 9-cent bid by 17-cent ask, right? Those get me a little bit nervous when I look at those, because if I, as an influencer, tell someone, oh, go buy this, if they buy it at 17 and the next trades at 9, that's a horror show, right? What the good news is they've upgraded their listing, and the bid ask spread is much more manageable now. So I think you've known the stock. You probably have done some due diligence on it yourself, but I think that copper and gold are two of my favorite commodities as we move forward in this market, and they're exploring for both, right? So I'm getting to know the story a little bit better, but that is one that we've just started to put on our list.
It's definitely one to watch, and I have interviewed Dave Jones before he passed, so I know the whole story, and hoping that his legacy can continue on, and hopefully they find something good. So we'll see what happens. But thanks for all your updates, John, and all your knowledge, and best of luck. I look forward to having you back on.
Thanks a lot, Aaron.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.